But for more perspective on the dynamics at play in the oil sector, I'm now joined by John Kilduff, partner at Again Capital in New York. Hi, John. Thank you so much for taking out the time to be with us on the show today. What were you expecting anything to come out of this Doha meet going into the weekend?
No, I wasn't. I thought it was a joke from the beginning, and that's to quote the Iranian oil minister who described the freeze deal as just that. This is an epic battle going on right now between Saudi Arabia and Iran over market share as we move forward here. And the downward pressure on prices is going to resume. As Brian Sullivan pointed out, the only thing saving the oil market today is this strike in Kuwait, which has taken about 2 million barrels of crude oil off the market, which is an incredible amount in an overnight fashion.
Right, John, so that's exactly what I was about to ask you next. Now, Doha is over, nothing came out of it like we all know. But the strike in Kuwait, how much of a downward pressure do you see it applying to the markets going forward? At least from what I understand, our sources telling us that it will last for maybe around 2 weeks.
That's right, and I've even seen, there's even some reporting that they've been talking already, and it could be just a matter of days even. Once that situation resolves itself, and you know it will, you're going to see prices quickly for WTI in New York trade down to around the $35 level. The new Saudi crown prince made it quite clear that he was angry about the Iranians not participating in the freeze deal, and said that the kingdom could up production by 1 million barrels a day, and that they would sell all they could into the market. So the Saudis aren't done with everyone yet in terms of squeezing out higher cost producers and also trying to keep Iran in a box.
Right, John. What's your reading on Iran? How sophisticated is their production infrastructure? How much oil can they actually pump into the market? And more importantly, are they even in a position politically to strike this sort of deal which Saudi Arabia seems to want out of them? Their supreme leader, the Ayatollah, he has said in the past that Iran needs to get back to the pre-sanction levels of oil production. What is your sense on this?
My sense is that Iran will absolutely not agree to anything other than what their previous production levels were within OPEC, pre-sanctions levels. When they get to that level, maybe they'll talk about a deal, but certainly not until then. And you're right, politically, internally, they can't be seen capitulating to any Saudi demands whatsoever, given the tensions between the two countries right now.
So what do you think is the Saudi strategy here? They definitely know Iran's not going to come on the table with an output freeze or a production cut. So why even keep up the pretense for, like they have done in the past, at least with the commentary that we seem to be coming out of the Saudi Arabian kingdom?
Well, I think that they feel that they have the deepest pockets and they can last the longest in this game. They have a ton of capital that they can still tap in the global debt markets. They could still sell a piece or two of Saudi Aramco. So they are nowhere near the end of their rope financially whatsoever. They may get credit downgrades. They may have other struggles. They may have to cut back a bit on domestic spending. But they can last longer by far than any other country. So they can wait everybody out and squeeze everybody out for quite some time. So that's why I think that they're willing to do this.
Right, John. Also, do you think we've seen the lows in this market? I mean, we did see it $26 a barrel not too long ago. It's currently prices are between $40 to $43 a barrel for NYMEX or Brent, whichever way you look at it. Where would you peg the price going forward from here, at least in the medium term, perhaps?
Well, certainly it's clear now, having just experienced it, that once we get below 30, it gets the attention of really the entire global market. Bargain hunters come into the market to try to lock in long-term supply deals, so there's a lot of hedging that goes on, and it certainly scares out and causes financial harm to many independent oil companies that aren't state-owned operators. But it also is very damaging to Venezuela and others. So while I still think that we could go a bit lower than 26, I'm not sure how much lower, and I don't believe we'll stay there for very long. But I do see us hovering around the $30 a barrel mark for really quite some time.
Do you expect it in the teens or maybe even single digits?
That's not off the table for me. I think the probability of that is in the low 15 to 20% area, but it is a real possibility. I've been in this market for a long time, and there was a time when it got under $10 a barrel. So to see a 25 or 20 or $15 print, is something that has happened in the past, and it can happen again. And $100 oil was really as abnormal as $10 oil is, and I think that's a lesson that's lost on folks, a lot of folks in the market these days.
Well, if that does happen, it's terrific for us here in India. It's just going to balance the fisk right out. But where do you see demand coming from? India, China, are those the two big markets from where demand is generating as of now?
India is certainly the big growth market for the oil producers. I'm sure you're well aware, the Iranians obviously just had a big trade mission to India that seemed to have gone well. India and Iran seem to work quite well, and the Iranians at times have considered taking payment in rupee for their oil barrels. So they're really trying to get in there. At this point, though, there's an interesting thing about the Chinese demand. What's happened there is that they've expanded their refining capacity markedly, and they are in the process of doing to the global refined product market, the diesel market, what they've done to the steel market. That is oversupply the globe tremendously. And there's a looming global glut of diesel fuel on the horizon as a result of China becoming a net exporter of that particular product.
Right, John. We'd love to talk to you for longer, but unfortunately we've run out of time. But thank you so much for joining us on the show tonight with your views, and we do look forward to speaking with you again.